Hi, good morning. So today we are going to deal with a new chapter, chapter 9, investor protection. And also today we are going to deal with a small topic, investor protection, its meaning and its need and what are its components. So investor protection meaning. So let me look what was its meaning. Investor protection is the effort to make sure that those who invest in their money in regulated financial products are not defrauded by the players of the market. അതായത് ഇൻവെസ്റ്റർ പ്രൊട്ടക്ഷൻ നിങ്ങൾ ഉദ്ദേശിക്കുന്നത് സെക്യൂരിറ്റീസ് അല്ലെങ്കിൽ ഫിനാൻഷ്യൽ പ്രൊഡക്ട്സിൽ ഇൻവെസ്റ്റ് ചെയ്യുന്ന ഓരോ ഇൻവെസ്റ്ററുടെയും അദ്ദേഹത്തെ ചതിക്കുകയോ വഞ്ചിക്കുകയോ ചെയ്തിട്ടില്ല എന്ന് ഉറപ്പുവരുത്തുന്നതാണ് എന്ത് ഇൻവെസ്റ്റർ പ്രൊട്ടക്ഷൻ. അതാണ് ഇൻവെസ്റ്റർ പ്രൊട്ടക്ഷൻ കൊണ്ട് ഉദ്ദേശിക്കുന്നത്. And also it's focused on making sure that the investors are fully informed about their transactions, affairs and securities, and ensuring the rights of every investor that are exercised properly and responsibilities are fulfilled in manner of justice, which means it makes sure that investors are fully informed about their transactions and affairs in securities, ensure their rights and responsibilities that are fulfilled in manner of justice. So this is also about the meaning of investor protection. So let me like what are the need for investor protections. There are 8 points to be noted. First of all, to create awareness among the investors. Then secondly, to instill a confidence in their minds to for investing, so they will invest in confident with a confidence. Then third, to create a conducive atmosphere for investment, and also to ensure transparency in dealing, to create a vibrant capital market, to regulate the market on sound lines, to create discipline and uniformity in the market, and also to create accountability among market players. And this is so simple topic, and I don't think it needs to be given explanation. So let me move to what are the components of investor protections. There are three main components: rights of a shareholder, responsibilities of a share, and various regulators. These are the three components of investor protection. Then first of all we have to look what are the rights of a shareholder. There are 16 points in our text, and I would like to talk about a few points, and further you have to read the text. Okay, there are a lot of 16 points, and we are now going to study about what are the main 8 points. And first of all, to receive the share certificate in due time. A share when we invest in any security, we should get a certificate in due time, which means within 2 days. And also to receive contract note within 24 hours. Contract note means the note which we are entering into a contract with various while investing in various securities. And also to receive money or securities within 2 days. When we deposit or withdraw the money, we should receive our money or securities within 2 days. And also to get redress against fraudulent price, unfair brokerage, etc. And also to receive dividends in due, participation in vote, to move against the company by way of civil or criminal proceedings if there are any problems with the companies, and also to receive corporate benefits like bonus, right share, etc. And also all these points we are familiar with that, and there is no need for further explanation. So let's me move to what are the responsibilities of a shareholder. And there are various 6 points, 6 responsibilities of a shareholder. First of all, to deal only with the SEBI registered trading members and sub brokers. So today there are numbers of sub brokers and trading members, and we have to look on that it is a responsibilities of a shareholder to ensure that the broker or sub brokers are registered with SEBI. So if they it not registered with the SEBI, we can't further move for legal procedures. Okay. Then secondly, to deliver in the time the money securities due under the trade within 2 days of the transaction. It is our response. It is a responsibility of shareholders to deliver the cash, money or securities in due time. Also, to read and understand the client agreement before signing it. Before we are moving to make the contract, it is the responsibilities of a shareholder to understand the client agreement. And fourthly, to be informed, specific and vigilant about the changes in the capital market. It is the responsibility of shareholder to understand what are the changes, specifically or generally what are the changes that happened in the capital market. And fifthly, to pursue the extensive disclosure on listed companies available on stock exchange website, which means there will be sometimes the SEBI provide some amendments, some changes in the laws, etc. So it is the responsibilities of a shareholder to pursue what are the changes made by stock exchange of SEBI in their website. And the third component of investor protection are various regulators. Who are the various regulators on Indian financial market? So it's our SEBI, then Reserve Bank of India, Insurance Regulatory and Development Authority, Ministry of Corporate Affairs, and Ministry of Finance. So these are the various components of investor protection: rights of shareholder, responsibilities of a shareholder, and various regulators of Indian financial market. And I hope everyone can understand this presentation. So it is a simple topic and it doesn't need a further explanation. So let me conclude here and thank you.